Yo, yo, yo. Welcome back to the channel. AMC up 3.5%. Good day. Good day for AMC. So today I'm going to provide a technical update, show you some of the things that I'm seeing. Nothing in this video is financial advice. It's also not even really a prediction. It's more of me just looking at the chart, just looking at it, and coming to some technical conclusions, mostly to the bullish side because I am personally bullish on the stock long term. So that is my bias. And without any further ado, let's get into it. So I have a few things that I drew up before the video that I want us to be looking at. These are the things that I'm looking for. I think that there are a bunch of other great channels that you should check out that are going to show you different perspectives. They have cycle theory people out there like Astro. Rico's been focused on cycle theory a lot more. Colin Gladman. So go check those guys out on YouTube if you want to see a different perspective. As well, you have Option Drops. Tyler Wilson Investing talks about AMC stock. He's a really good TA guy, so go check him out. And just get some diversity of opinion on different ways to view charts. Don't just like watch one person and then say, yeah, that's 100% what has to happen. But yeah, so let's get into it. So the first thing I want to do is look at the candlestick right quick and just say that this does appear to me like somewhat of a shooting star candle, which is on the daily, which is typically a bearish candle. Normally, this is more like up thrusty. It's a weak move up, and you're gonna see a reversal. You have a similar sort of move here on December 21st. You can see. You can see here you had a similar where you just have this long wick at the top and a big body at the bottom. Normally, that's going to insinuate that there is at least some downside in the short term. So with that context, let's look at all of the patterns that I have drawn out and how I'm looking at them. So the first thing that I want to look at is this potential micro falling wedge that we have going here. And this is based on the resistance from November 17th all the way down to now. We did briefly break out of this today, and then we came back. Now, I think that on shorter time frames, this is going to be looking like a retest. So it's going to be interesting to see if we open and then test this falling wedge and then can get some upside. I know that today Max Pain is sitting at $28. I'm sure it's not going to be far away from $28 or $29. And on Fridays, AMC does tend to stick around that range if it opens pretty close to where Max Pain is. It normally finds a way to get back there. So what does that mean for this micro falling wedge? Well, if it's $29 and you break down here and then you swing back up slowly, similar to what we've seen before and after Christmas, a similar sort of move, and then you just kind of like trade sideways, then I don't think you're in too bad a shape, because then you'll have a pretty clean retest of this, and then you'll be sitting above it. That would be pretty much bullish confirmation, and I would expect that bulls would come in and be looking to push the price up afterwards. So that would be good. And then you have this macro falling wedge that I drew up yesterday. Okay, so this is a falling wedge that's based on the $52 top in September. And you can see that this trend line has acted as support and resistance along the way. And now it's acting as resistance. We did not break this one today. Okay, this one actually behaved as resistance short term. And then the bottom line for the falling wedge is all the way back from July, and it's down. And on the daily chart, it looks a little bit cleaner than it does here on the hourly. There you go. So you can see here that this is obviously a key zone so far that we've seen, but we haven't really tested the bottom of it too many times in recent history. But I will say that with the other factors that we'll talk about, it is pretty interesting. And you can see that we got rejected off of it, got sent back down to retest this smaller falling wedge. And both of these have false breaks, right? So the white macro falling wedge has this bull trap that occurred here. You come back down and you kind of accumulate into it. And then the micro, you have the, well, this wasn't a falling wedge at this time. This was just a resistance trend. And then you have these bear traps, potential bear traps that occurred here. So those are some things to look for. I also have this breakout trend. Now this breakout, like this is basically a bear trend, and this is what I'm looking for a breakout in the short term. And I know a lot of people are drawing head and shoulders patterns, and I have one here. So like this is one example of a micro inverse head and shoulders that you could possibly see. And if you complete this in this sort of horizontal, like clean it's almost like an upside down distribution, like an accumulation, right? You get this clean level, you come back and test this $42 region, you would be actually breaking this longer term downtrend. I don't know why. I think because I changed the time frame, but this longer term downtrend from June. So this would be a really strong signal for bulls. And then you have what I wanted to point out. You have another potential macro head and shoulders that you could be forming here as well. And this one, it's like a slanted inverse head and shoulders. Sorry, I probably have been saying head and shoulders. I mean inverse head and shoulders. But if you come back up here in a similar fashion, now, I mean, if you just break out, I suppose that it could change essentially the angle that you would be looking at it. So if you do get that $42 push that we just talked about, right, it kind of changes the dynamic of it, and you could potentially be in this sort of, this actually, I kind of like this a little bit better, actually. You would change the trend line to where this now becomes your bear trend before you swing back up. But you can see that you clearly have this this sort of inverse head and shoulders kind of buildup going on here. So within this, you're going to want to see this break, and then maybe you would come back down and retest this bear trend. Let's see if that's a Fibonacci. Bet you it is. So, I mean, if we just go straight to the arrow, then it's kind of like you false break the 236 on this. Maybe if we zoom. Yeah, see, that's like a 0.5 Fibonacci. See, that's kind of, you would expect it to come back to some sort of Fibonacci level that correlates with a downtrend that you broke out of. So let me take this off, and then I did want to look at OBV just briefly. Let me pull up my on balance volume and just kind of recap it. We cover this pretty much every day on the channel, just always update the OBV, but I just thought that it was pretty interesting to point out that right now where OBV is standing, let me turn this yellow so you can correlate the. So right now you have the same OBV that you had on June 18th when the price closed at $49, which is pretty crazy to think about. You also have you actually have a higher OBV right now than you did on June 21st when the price closed at $55. And what this indicator is supposed to show you is, you know, you look at this downtrend, you can see the downtrend in price, but the on balance volume suggests that the same amount of shares on, at least on a daily basis, are actually owned as these points that you see here. You can see on November 15th when we closed at $42, or November 8th when we closed at $45. The OBV is very similar. It's even higher than it was when we closed at like $52 on September 13th. And the way that this indicator works is that it adds to the on balance volume when you get a green candle. Whatever volume is in that candle gets added to this this chart. And then, so it goes up, and then if it's red, whatever volume is in that candle, it goes down, right? So it's not actually a track of like how much institutions own or anything like that, but it could suggest that the selling pressure is actually being done by institutions that are intending to accumulate more shares whenever they create these bottoms, if that makes sense. So definitely look into this indicator. I also have, oh snap, we were looking at that on the daily. Well, it's kind of the same thing though with the 4 hour. I think the 4 hour actually looks better than the daily does. I was looking at the wrong correlation, like a bot. But yeah, and then on the 4 hour, you can draw, and you can also draw patterns on these. So like you would say, I mean, I would say for sure the 4 hour is clearly, to me, it's clearly a an ascending triangle. You could even draw it from here and say that you've already pretty much broken out of it. And normally price follows volume. That's the idea behind the indicator. And you'll see this like if you watch a chart on a day-to-day basis, like if you watch a minute chart or something like that, you'll see like a volume spike. And then you'll see the price thrust upward sometime after, right? Like it'll pump up while you're getting that volume spike. See, where's this candle? So like you can see here that you had this big volume surge right here at this 1 minute chart. You had 43,000 volume on this minute, and then the price just sells off. But then you get this rally, right? What's happening is a big boy, a whale, an institution, something buys a bunch of shares, and they're trying to trigger. And what they do in this case is maybe they some algorithm caused a sell off based on this candle, and then basically they know that there's going to be a key support that gets met, probably a Fibonacci. Like usually that's how the algorithms work, off of Fibonacci. So you see it bounces off of this 885 and then send it, right? So whoever bought these shares here had a good idea that they were going to be able to get a higher price for the stock in the short term. It's the same concept on longer term time frames, and the OBV becomes a very powerful tool when it's used on these larger time frames, because then you can kind of see over the course of time that perhaps whales have been grabbing up shares on a day-to-day basis, which you can just look at it. You can just look at the volume chart here at the bottom and see that the green candles overwhelmingly have more volume attached to them than the red candles in the recent trading period, which is another way to just kind of tell that in a general sense that bulls are in the process of accumulating shares. At least that's what I take from it. Of course, nothing's financial advice in this video. I'm just telling you what I'm seeing. And then we can look at the daily correlation. I'm sure it's not going to be very different. But yeah, so that's pretty much everything that I'm looking at. Oh, and then I had my ascending triangle. Did I put my ascending triangle in here? Yeah, I did. But yeah, you see the same thing. I'll just show you briefly on the daily here, which I kind of already did, didn't I? But yeah, you have the same, like while price is in a steep downtrend, right? OBV, pretty flat. And actually, you have a short-term uptrend here, right? And then we can refer back to our shorter term ascending triangle that we were looking at. And we actually got to break out of this, in my opinion. You broke out of this ascending triangle. That was based on these two yellow points here. You have this kind of slow climb. You broke out, and then you kind of had a bull trap occur. So you got sent back down. I think that for my conviction tomorrow, what I think is most likely is that you kind of have one of these days like you saw, and I was kind of memeing the December 23rd and December 23rd and December 27th, how they ended up being like the same exact chart. And I saw everybody kind of joking around about how, oh, are we breaking the algorithm? Whatever. I mean, maybe, whatever. But I think that you see something like this happen. Max Payne right now is at $28. I'd expect it to be at $28 or $29 by close like tomorrow. So what I'd say is this looks like a distribution on the shorter term. Like here's an accumulation, and you have this distribution, which is kind of like this inverse effort to send the price downward. I'd say that you probably see a Fibonacci retracement. I think you stay above $27 for sure, in my opinion. But you probably shoot down like this. Maybe you go in your golden pocket, and then you just kind of ring back up, and then you just kind of do one of these till the end of the day, whatever. But and then you end up at max paying, so like $29, whatever. Like it's gonna be one of those, in my opinion. Obviously not financial advice. Don't buy options or anything based on that. Just like do your due diligence, do some research, whatever. But yeah, you probably get stopped out in this sort of region. But what does that do to the macro view? Like because now what this does is this makes it to where you did break out of this falling wedge, right? And then you came back, you retested, and you did it. And then it actually probably puts you, like, say it's $29, like it'll end up at 29.30 cents. If it does this, you're kind of just sitting on the wall of that right there, right? So you have this shorter term accumulation that'll occur. You're retesting the top of that ascending triangle we were looking at, and then this micro inverse head and shoulders. Yeah, I mean, this is going to be an effort for like next week, right? So you come back up, maybe you break out of that ascending triangle, the falling wedge. You got your retest, and then that you get your volume going into next week. This is all dependent on volume, but I overall I'm bullish right now. Like I feel pretty good about where the price action is at. Um, I think you see that break down, or you maybe see a break up. But then you kind of just get that flattening of price. It can go up or down. Um, I think it's most likely you go down though, just because it's just such a clear distribution in my opinion that you saw here. So you come back in, you retest this trading range, and then and then hopefully going into next week, you start to see some volume pick up as you've broken out of this downtrend. And then I think you could see the mid 30s pretty relatively soon. It just depends on what that volume looks like. You know, like that's the most important thing. If you do the price action and then you don't get the volume, then the insinuation to institutions that are playing these games or whatever is going to be, oh well, people aren't interested enough in the stock, so now we got to send it back down, find more support from retail, and then swing it back up to get them more excited, et cetera, et cetera. Like that's the logic behind it. And I know a lot of people will say retail owns 90% of the float. You know, how are they able to do this with the price action? You just have to understand that. And I know that there's also like the dark pool like manipulation and all that stuff that people talk about, but at the end of the day, the chart is the chart, right? And there are institutions that are long on this play, and they are looking to sell this stock for as much as they possibly can. And my personal conviction is that that's what they're building up towards. They're trying to put the stock in a place where they think that once they send it up, it's going to get them the ultimate profit, and they'll be able to sell this stock that they're buying down here at $20 to $30. They're going to be able to sell it for $100 plus. That's my personal conviction. It's not financial advice, and I could be completely wrong about that, but that's what I personally believe about the stock. That's how you get your next leg up. As far as like MOAS and stuff like that, like I can't speak to the MOAS narrative because it's so much smoke and mirrors. It's so difficult to be able to get the real ideas. But what I will say is that if you want to enforce a short squeeze, the best way to do it is through a technical breakout and getting that FOMO and excitement back into the play. And I think that what you're doing right now is you're trading against, or maybe you're not trading, whatever. You get what I'm saying. The price action is being driven by bullish institutions that are trying to create an environment that's gonna make the perfect amount of FOMO, right? And they do that through support and resistance. They do that through selling off, creating buyback structures, so that then people, and also making people hate the stock in the short term so they can get it from them for cheap, because not everybody's apes, right? So people will just buy, like today when it just goes all green, right? People will buy, and then specifically on this day, like this day right here, right? December 17th, when it pumped up like this, a bunch of people bought right here that weren't in AMC before. And then the next day, oh, it goes up. Oh man, we're going to the moon, man. And then boom. And now what they're trying to do is they're trying to shake these people back out of those positions so they can get the stock here. They see this support from this volume, and then they're going to try and create another price rally so that then they can get that higher volume, get new buyers, and then boom, they'll sell it off and then kind of create that sideways movement. That's what I'm hoping that you see. And then from there, you know, what they really want to be done, and this is why you need to watch for these more and more downside. It's always good to look for more and more downside, just because you got to realize that their goal is to shake people off the wagon too, right? So they're going to do stuff that really demoralizes people and makes people feel crushed so that they can get them out of their positions, so that they can get more in their position, right? They know that AMC has one of the best brands from a stock standpoint, and that's why I'm so bullish. That's why it doesn't really matter to me what the price goes to, because personally, even if MOAS was disproven and whatever, I don't know what all it would be. I know that they would still drive the brand of the stock, not the company. They would drive the brand of the stock up and create this social media crazy blow up experience. So that's what is like the first thing for AMC, right? Like that's the number one thing, and that's how you get your next leg up that we've talked about before, right? Trend based fib extensions. Oh my fibs all weird. Oh yeah, I got them on oh man, got them on log. That would be fun. But yeah, before we've talked about. I mean, maybe one day I'll hold on. Let's do it with log, and then I'll close the video out. So let's do this. So we've talked about. Oh my goodness, that was terrible. I like a broke. We've talked about before how with the trend-based Fibonacci extension, you see here that the $72 run up was pretty well predicted by that. If you measure from the bottom in January to the top in January, and then back down to the bottom of the buy button collapse. If you did here to here, these have been the previous price targets that we've talked about, right? And obviously, like this is just the next leg up. So I'm not saying like all time price targets. I'm just saying like these are the regions once you get that swing up where you're gonna start to see that resistance, right? You're gonna see selling resistance occur at all of these key levels. Let's just do it on log though, because I'm curious now because I've been using log scale on my retracements a lot more. And yeah, so the 100%, that was kind of the, yeah, I mean, it wasn't as accurate, but you can see here that it was the key resistance that it just kept bouncing. So what would that be if we did the same measurement here? If you do get the swing up, oh my goodness, this puts you at $300. That would be insane, dude. Dude, that would be insane. Look at the 1.618, 1400. What? Oh, dude, I'm about to be everybody's favorite Dave now, dude. What if we measured it from the buy button all the way to the top of here and then back down here? Oh, baby. Oh my god. Oh my god. MOAS confirmed. Not confirmed, dude. Okay, like I'm not. That's not what my price targets are right now. Okay, I'm gonna have to look deeper into that and let you guys know more detail about that. But nah, for now, those are all the things that you're looking for. I think you're in a really good place on the chart. You just got to see that volume come in to confirm your moves right now. If you don't see the volume, and I know manipulation, all that stuff, dark pool, what do they call it? Order flow delay that Lou has talked about for a while. Like I get it. But the chart is the chart, right? And the price action is relatively predictable. We've done a good job of predicting the price action using the chart that we have at hand. And if it's manipulated and completely controlled by institutions or market makers or whatever, they're still sending messages through the chart. So the chart is still going to be very effective for us, right? So yeah, with all that being said, I'll shut down the video there. Tomorrow, I think you're pretty flat. You probably have a pop in one direction or the other, and then you kind of just level out just like you did on the 23rd of December and the 27th of December. And then the 28th of December, you did it, but upside down, which is kind of funny. You have one of those sorts of days tomorrow. You level out, and then hopefully going into Monday, what I'm going to be looking for that big swing up, you got to get that bullish volume in. And if you don't, then you start to say, okay, well, we got to go back into this downtrend, and you're probably going to be going to this like 25, 26 at least. And then from there, we'll have to see what the volume does, and then we'll have to make better decisions. But I think you look accumulative, guys. Like I really do. This to me, this looks like your cute little, your all-time, your classic Dave, the classic Wyckoff, you know, you got your cell climax, you know, you got your automatic reaction, You got your sell test. You know, look, we can go on shorter time frames, man. It's all there. It's all. Oh god. Why do you watch this video? Like, what's wrong? I'm just kidding. Of course, I'm wildly entertaining. I mean, who wouldn't want to? No, not entertaining. Just tell us what you think is gonna happen, Dave. Look, man, I'm here to like show people how to analyze charts on their own. I need to figure out how to like deliver that message a little bit better. You know, you got your LPS, dog. Come on. You got your oh, look at this SOS, dude. Look at this SOS. Look, and then you got your backup LPS, last point of support phase, dude. Come on. Come on, composite man. Composite man. Woo! Why you watch this? Why are you watching this video right now? Why haven't you clicked off? That's what I want to know. All right. I'm just fucking with you, dude. You know I'm just fucking with you. You know I'm here with you, dog. Come on now. All right. Yeah, so you got this. This is, I mean, to me, you know, it looks good. Looks good. You got your little sell-offs, your little. Oh, you know what? Let's look at the OBV though. Let's look at the OBV and what it did in this range. Ooh. See. Ow. God, I don't want to be that. Give me that. I mean, you're okay. Yeah, you're not. Yeah. This is what you know, it is. Yeah, you distributed from here, but now you're kind of I don't know. You got a lower, got a higher high, but a lower low here on the OBV. That's not good. But it doesn't matter. What matters is yeah, whatever. So your OBV, okay, my bad. Your OBV, you have this and then you're boop like that. That's how you end the day. Okay, I don't know if that's the end of the day or the next few days, whatever. And then on the OBV, what it looks like is but it's like slightly higher on the OBV. You make a higher high like this. Boom. Big volume candle at the end of the day or something like that. And then that is where you're going to get that next kind of swing up. This is a 10-minute time, much shorter. Okay. But that's how you're going to see it. You're going to see the OBV kind of lead. And, you know, going into next week, you're going to see, hopefully, you'll see that OBV go up. And then you'll see the price follow right behind it. Those big volume pumps come in, pump me up. And then we go to Meme-iversary, dude. We go to the end of January with it. Come on. Come on, GME AMC reunion, dude. Yeah, so that's pretty much my sentiment. That's how I feel about it. Hopefully you enjoy the video. Hopefully you gain something, learn something. I try to make it more structured and easier to consume by having the patterns and stuff already kind of pre-drawn before I start freestyling. So hopefully you enjoyed that. Let me know if you did in the comments down below. And until next time, follow me on Twitter, and I have a Discord link in the description down below. You can join there. And they got a bunch of charts and all kinds of cool stuff going on there every day. So, woo! Take it easy. Peace.